Hi folks, welcome back to Murthy Finance Academy. So today, we're going to tear into a really fascinating economic puzzle. How did a country famous for low wages manage to build one of the wealthiest median populations on the entire planet? Okay, let's dive right in. To really get a handle on this story, you first need to understand the huge difference between mean and median wealth. And there's a simple analogy that makes this crystal clear. Picture this. You've got 10 people in a bar, and each of them has a net worth of about $100,000. Then Elon Musk walks in. All of a sudden, the mean, or the average wealth in that room, just skyrockets into the billions. But did anyone else actually get richer? Nope. And that's exactly why the mean can be so misleading.
The median, on the other hand, tells you what's happening with the person right in the middle. It gives you a much, much truer picture. And here's the kicker. Taiwan's median wealth is almost identical to that of the United States. I mean, just let that sink in. That is an absolutely staggering achievement for an economy that doesn't have the US dollar's reserve status or America's massive natural resources. And this right here is the heart of the mystery. When you look at its own neighborhood, Taiwan's median wealth has just blown past its biggest rivals, South Korea and Japan. It's not just playing in the same league, it's actually leading the pack when it comes to the wealth of the everyday person.
So that brings us to the big question, doesn't it? For years, all you'd hear about on Taiwan was the 22K curse, this term that came from a government policy that kind of pegged new graduate salaries at a really low 22,000 new Taiwan dollars a month. It created this whole culture of feeling like wages were stuck in the mud. So, how on earth can a place defined by that curse be so incredibly rich in assets? Well, it turns out this isn't a bud. It's a feature of a very specific economic plan that was put in motion decades ago.
The whole story really starts right after 1945. See, both Taiwan and South Korea came out of Japanese colonial rule with pretty similar economies. But as they started to industrialize in the 60s, they hit a fork in the road and chose two completely different ways to build a modern capitalist economy.
South Korea, which was under a pretty authoritarian government back then, went for what they called unbalanced growth. The state basically handpicked a few giant companies, the ones we know today as Chaebols, like Samsung and Hyundai, and just threw money and resources at them. Taiwan did the opposite. It let a whole ecosystem of small and medium-sized businesses, or SMEs, be the engine for its exports. And this led to a huge cultural difference. South Korea created an employee culture, while Taiwan built a boss culture.
You know, there's this Taiwanese proverb that just nails the mindset perfectly. Think about it. The cow is the huge, stable corporation, and the tail is the employee. You're safe, but you have no real power. The chicken head, well, that's the small business owner. It might be riskier, sure, but you're in control, you have your freedom, and your potential upside is limitless. That way of thinking literally created a nation of entrepreneurs.
And this split in how they ran their industries was perfectly mirrored by how each country built up wealth for its citizens, and it all started with the land itself.
Back in the 1950s, Taiwan rolled out this incredible land-to-the-tiller program. As you can see here, they first capped rents, then sold off public land directly to the farmers who were working it. And then, and this was the masterstroke, they took land from the big landlords and gave them shares in new state-owned companies instead. This totally reshaped their society. It created this massive new class of small landowners, making sure that when real estate values went up, that wealth was spread out among the people, not just hoarded by the rich.
Now compare that to South Korea. Its housing market is built on this really unique system called jeonse. Instead of paying rent every month, a tenant gives the landlord a gigantic lump sum deposit. We're talking 50 to 70% of the property's entire value. For that, you get to live rent-free for 2 years. The landlord then takes that huge pile of cash and invests it, hoping to make a profit before they have to give the deposit back.
The problem is, this system creates this fragile hidden chain of debt that runs through the whole economy. Tenants are borrowing like crazy to get the deposit money, and landlords are using that money to buy even more property. All this leverage has pushed South Korea's household debt to over 100% of its GDP. That means the median wealth number for Korea looks good on the surface, but it's sitting on a very shaky foundation of hidden debt.
Okay, so beyond property, there's another layer to Taiwan's hidden strength, and it has everything to do with how cash moves and where it gets invested.
So get this, Taiwan has a massive shadow economy. We're talking an estimated 20 to 30% of GDP that's just operating off the books. To put that in perspective, in places like the US or Japan, that number is closer to 8 or 10%. So for every $100 of official economic activity in Taiwan, there's another $30 or so floating around, mostly tax-free.
And this untaxed cash, it doesn't just, vanish. It gets channeled directly into real assets, just like this chart shows. By skipping the tax system, all that money boosts the take-home income for millions of small business owners, and it flows right into two places: real estate and the stock market. It's a massive, unofficial engine for building wealth for the average family.
So that begs the question, where exactly does all this cash go? Well, the data shows a really sharp difference in culture. Unlike their Japanese neighbors, who are famously cautious and keep over half their assets just sitting in cash, Taiwanese households are aggressive investors. They're what you'd call yield hunters, and they treat their stock market like a personal cash flow machine.
And you know what? They invest for a really good reason: dividends. The Taiwan Stock Exchange has historically paid out an average dividend yield of between 3 and 4%. That's consistently higher than the S&P 500. It creates this powerful reason for regular people to put their money to work. And this isn't just about the big tech giants. It's that whole decentralized network of small and medium-sized companies that supply giants like TSMC. They're all part of this machine that spits out cash for everyday investors.
Now we have these two totally different models. The real test, the ultimate stress test of which one was better, came during the 1997 Asian financial crisis.
And when that crisis hit, the differences between them became painfully clear. South Korea's economy was top-heavy, leveraged up to its eyeballs, and totally dependent on a few giant Chaebols. And it collapsed. It needed a $58 billion bailout from the IMF. But Taiwan? It was like a flotilla of small, nimble boats. Its SMEs just pivoted. They went from making textiles to toys to electronics. They weathered the storm and protected people's wealth. While in Korea, people's life savings got wiped out.
The last piece of this puzzle is all about defense. Those low wages we talked about are balanced out by a low cost of living. And this is so important. Taiwan's national health insurance system basically prevents medical bankruptcy, which is something that can just destroy a family's wealth in a place like the US. That, plus a lower burden from private education costs compared to South Korea's hyper-competitive system, means there are fewer things draining your assets. It protects your capital and frees it up for investment.
So, at the end of the day, the comparison couldn't be clearer. South Korea was the hare, right? It chose this path of explosive, super fast growth that gave people high wages, but it also came with crushing debt and a fragile system. Taiwan was the tortoise. It chose a slower, more spread out path that built a foundation of real, resilient wealth through assets, not just a paycheck.
And the numbers we see today are the ultimate proof that the tortoise model worked. While the rest of the world was watching the drama of the big Chaebols, millions of Taiwanese shopkeepers, factory owners, and investors were quietly paying down their mortgages, reinvesting their dividends, and building a fortress of net worth brick by brick.
And that really makes you wonder, doesn't it? As the whole world faces all kinds of new economic challenges, which model is the better blueprint for the future? Is it the flashy, high-growth hare, or the slow, steady, and resilient tortoise? It's a question that really forces us to rethink what it means for a country and its people to be truly rich.
If you liked the video, please do like, share, and subscribe to Murthy Finance Academy.